In this video, I'll be showing you how to trade trend continuation on Euro USD and USD JPY. So you can simply put trend continuation trading strategy on these two pairs. Very important. So if you want to properly trade trend continuation, then this video is for you. Watch this video till the very end. Please support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more forex videos like this. Also check the channel for other forex videos and educational content. Right here on Euro USD, for you to properly trade trend continuation or trend continuation strategy, you must properly understand two things. Number one, market structure, and the second thing you must do is to understand time frame analysis. So let's say, for example, if you are a beginner in forex trading, I advise you do multiple time frame analysis twice. Okay, so that means you do your higher time frame analysis, let's say for example on the 1 day, and then you go back to your 4-hour chart to do your analysis and take a trade there, or you do on 4-hour and take a trade on 1 hour, or you do on 1 hour and do another analysis on 15 minutes. So this is very, very important. It helps you understand what the bigger players are doing on the higher time frame, and then you trade in line with that pattern on the lower time frame. So this is one of the things you must do in trend continuation, understanding multiple time frame analysis. The next thing is market structure, and I want to really deal with this in this very video. Like we all know, market structure is very, very important when it comes to trading. Let's say, for example, market is moving to the upside. For you to see that market is moving upward, we must see a clear movement upward. Market should make a progressive move, creating higher highs and higher lows in this very pattern formation to the upside. And also, for you to say market is coming back to the downside, we must also see a strategic movement downward, creating lower lows. Okay, so we must see lower lows and lower highs in this very formation. You know, you understanding this is not enough in the market, because what you will see out there is for the market to move upward once you see this kind of pattern. But sometimes when you are trading, you discover that for the market to actually move upward, sometimes the market will move in series of patterns before it can then move upward, and then move again downward before it moves. Sometimes market can go below this very level right here, and then create this very new low, lower than the previous low at this very point, for market to begin to move upward. This is very, very significant on the chart. We see this most of the time on the chart. So how can you properly identify your market structure? The first thing you must do is to know the highest high and where market moved from significantly in the past. So taking note of 2 points is very, very important. Let's say, for example, if you go back to this very chart on Euro USD 1 day, you discover that this market is moving to the downside. If you look at it very well, market is moving downward. How can you justify the fact that market is moving downward? The first sign that we see that market is coming back down here is that we saw a new low, lower than the previous low at this very point. So market move all the way from here upward and then come back to the downside, create a new low at this very point, lower than the previous low at this very area. Now you notice one thing here, one thing that is very significant here is when the market was moving upward, it was moving in a very nice uptrend. Okay, so market was moving the very nice uptrend right here. Market moved from this very point, we have a little correction to the downside, move again, correct, we have market move correct here, and the market move upward. Now if you look at this very movement, for me, if you want to really identify how the market move right here, this is what you need to do. From this very area where the market starts moving to this very point is one significant move. The market retrace, then from this very point to this very area is another significant move. The market retrace from this very point to this very area is another significant move. The market come back to the downside. That also means that if you see the market move downward, okay, below this very area, but did not come to this very point, then it means that market is still in an uptrend. Market have capacity to still move upward. You know, many persons don't understand this very concept. If you look at this very movement and you identify this structure like this, then it will help you a lot. Now, if you come back to this very point right here, if you discover the market move down, create a new low, lower than the previous low at this very point, and then move upward, did not create a new high at this very area, the market come back down to create a new low. So this means that this market is having a progressive move to the downside. So market move from here downward and then move upward and then come back to the downside, create a new low lower than the previous low at this very point. This low is lower than this very area, and then this low is lower than this very area. So market is moving lower low in this very progression. So if you look at this, it means that this market, if this market move upward, okay, and move up to this very point, this does not mean that the market has broken structure if market go above this very area. It means that the market have capacity of coming back down because this is a very strong supply area. Until market move above this very area, that is when you can then say that market have changed direction. That is when you can say there is a market structure shift. Okay, so if the market go above this very area, there is no market structure shift yet because market have capacity of moving back to the downside and create a new low even when it move above this very area of resistance. This is very, very important on this very chart, and it is what you need to pay attention to for you to ride massive trend in the market. Now, if you look at this very pattern, market is moving to the downside. For me, I am very confident that this market is going to still move down. So if you are trading, you trade in line with the market direction. Okay, so market is still going to move to the downside. So you go back to the lower time frame, for example, since you now identify that this market is moving to the downside from this very area, market move down, retracement, move down, market of capacity, retracement, and then move down again. I will be taking trade in line with the market direction to the downside instead of looking at market moving upwards. So for this very case, I will be selling the market on Euro USD because the higher time frame, which is the 1-day chart, is pointing that the market is coming back downward. So what I have to do next is to go back to my lower time frame, which in this case should be the 4-hour chart. So if you look at the 4-hour chart right here, you discover that market was in a mini uptrend in this very case. Market moved from this very point of support right here all the way upward, and right now market is coming back to the downside. If you notice in my last video, there is a video I did on this very channel on short right here, Euro USD sell-off inevitable, and that was exact same thing we see right here. I talk about that this very week, early this week, that the market is going to sell off for the market to come back down a little bit before we can see any move to the upside, and that is exact same thing we see right here. As market open on Monday, we begin to see market sell off from this very area. What I am expecting right now on this very chart, in line with this trend continuation strategy, is that this market should retrace, okay? Because if you look at this very point, we have a very strong support right here, which have broken already for market to move downward into this very area. So therefore, there is a need for the market to retrace before continuation to the downside. So if you are to take a trade, for example, a sell position, you must take note of this very area of reference point in the market. So this is a very important zone where I am expecting market have possibility of retracing into before continuation to the downside, because on the higher time frame, which is the 1-day chart, market is still pointing downward. Market have capacity of moving to the downside, and that is what you should be looking at right now. So on the immediate short term, Euro USD 4-hour chart, expect this market to begin to retrace upward. So within this very zone, market should continue back to the downside again on the 4-hour chart. So until we see this very market right here at this very point of resistance break above this very area, we are not going to take any buy position on this very chart. Okay, so this is very, very important to your understanding of taking advantage of market trend and trend continuation trading strategy. So this trend, as you can see right now, is still going to move back to the downside, but wait for this very retracement to come into the market first of all, then the market is going to come back right down for a sell opportunity around this very area on the 4-hour chart. So this is very important. Now the next thing here is on the USDJPY chart. If you look at this very chart, something very important is the market has been on a very progressive uptrend. Look at it here. Market moved all the way from this very area upward. This was the first impulsive move, and the market retraced, and then we have this very long impulsive move right here. Market retraced, and then we have this impulsive move. Market retraced, and then market move and then come back down a little bit and then move again. There is something I want to show you right here. So market was making progressive uptrend. This is a high right here, and market move another high, market move another high, like that to the upside. So if you look at this very area, market structure shifts happen at this very point, and then we see a fail swing at this very area of support, and the market continue to the upside. One thing very important here is that market has been making progressive uptrend, but something happened around this very area of resistance. Now if you look at it very well, you discover that at this very point, market come back down, okay, will not create a new low, which means we are in an uptrend. But when market moved to the upside at this very point, market did not create a new high, and we did not create a new low. This means that the market is still in an uptrend. Look for buy opportunity in the market. This should not confuse you, in as much as we did not see the market create a new low lower than the previous low at this very area of important support right here, and market pause at this very point and begin to move upward. It means that the market have capacity of moving to the upside. So for the market to fail to create a new high around this area, it's also a sign that the market have capacity of coming back down. But we need to pay attention to the overall trend. The overall trend was showing us that the market is moving upward. Therefore, we are going to take the market moving upward instead of market moving to the downside. And that is why a buy continuation pattern is an important thing to look for in this very area. So market break out at this very point and create a new high right here, and then begin to move sporadically to the upside. So if you look at this, we are not considering all this very move that is in between right here. Okay, so when you are doing trend continuation, all these move are of little significance. Okay, they are of little significance. If you look at them here, there are a lot of them on the chart. We are only paying attention to the major moves and major retracement on the higher time frame, and then you go back to the lower time frame to take your trade in line with what the major areas have already shown you on the higher time frame. So if I go back right here to the 4-hour chart on USDJPY, from this very area to the 4-hour chart right here, I want to show you something very important here as well. So from this very analysis, we know that the market is moving upward. Okay, from this very point, markets have a severe drop to the downside and begin to move sluggishly upward with little strength, unlike what we see right at this very point. This is an important sign that this market have capacity of retracing or a reversal to the downside. Therefore, we need to be very, very careful, because the market is already at this very level of important resistance at this very area. So this very point is important right here. Market have capacity of moving down from here. So it is not nice or good for you to take a buy position from here. It is good for you to wait for the market to retrace back down into this very zone of support for you to take a buy position, because we are still in an uptrend. So what you need to do right now is to wait, not taking a buy position here. Wait for the market to come back down into this very area of important support before you can take a buy position to the upside. Remember, this is just a spike to the downside and a move upward. The initial and the most important reference point on this very chart is this very area where the market move into and pause for a long time, and then before market begin to move upward. So this very area of important support right here is the most important point that we see on this chart right here. Although market come into that very area and have rejection to the upside, so until market break this very area and come back down and take out liquidity from this very little nice rejection from this very point, we are not in a downtrend. So we are in an uptrend right now. Pay attention to taking a buy position on USDJPY. So what I mean here is that if you see the market begin to come back to the downside into this area, we are still in the buy position. Buy the market until we see the market mitigate this very area of liquidity and collect liquidity from the market and begin to move upward and fail swing. Once you see that fail swing in the market is going to begin to move downward. This is only when you can begin to look for sell opportunity to the downside. So right now, for you to ride the trend on USDJPY, pay attention to buying the market and not selling the market. And on the immediate short term, wait for this market to retrace back down into this very area, possibly before the market is going to move to the upside and this very level of support right here. Market come back down, the market is going to move to the upside as well. So this is how you use trend continuation to trade the market. I believe this video is helpful. Please support this channel by leaving a like for this video, subscribe to the channel, and turn on the bell notification for more forex videos like this. Also check the channel for other forex videos and educational content. Thanks for watching today's video, and I will see you in the next video.